Greetings, welcome to my weekend market recap 25th June 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if option trading is suitable for you. I use the Q systems in my trading. All the Q components run on the Metastock platform. I got the line thickness to be better. And the technical analysis component runs on TradeStation as well. That was the last slide. Let's continue with the live systems. First, a look at the global markets, starting with Australian Index All Ordinaries. In the last market recap, we saw how using the trendline support in weekly and daily both, you could start to buy in the Australian market right when the momentum color in daily turned bullish green. Then it went to the upper boundary. The reward was much more than the risk taken in the trade, and you would exit at least partial profit, if not full position profit, in those swing trades. Following Q guidelines, we don't like to buy when the stock is already at the upper boundary. That was a useful decision once again. Price came down sharply from upper boundary and now it has broken below the daily trendline support as well as the weekly trendline support. Though it has broken both the trendline supports, the recent high is too far from Friday's close to attempt a breakout short setup in my view. I wouldn't short it on Friday, but next week if it continues to go down, I may look at individual stocks that are giving low risk short setups. I will not buy all ordinaries. I look to short but not at Friday's close. Let's look at Japan's Topix index. This is an uptrend and the uptrend is under pressure in a way. We see that once the bearish indecision came in the daily chart, price could not go up after that. We had a bear release, another bearish indecision, and on Friday we had yet another bear release. While these weakness signals were being plotted on the daily chart, you can see the daily momentum color changed from green to yellow and on Friday it changed to red. So it is showing weakness at the top. How top? It is at jump and thrust high, that is too high, and usually those up moves are not sustainable once it hits jump thrust high. That seems to be happening now. Will I short topics now? No, because it is still in an uptrend and it has another daily trendline support nearby. If that support is broken, I am more happy to consider shorting in the Japanese market. And if you remember my last week's market recap, I explained the exact same way the chart of SPY 1 week ago. And why I brought that up, the analysis that I am doing on the global markets is applicable to the USA market and vice versa. We can see in case of topics, I am anticipating a breakdown below trendline support, and I'm saying I'll be happier to short at that time. This is exactly what I told about SPY 1 week ago, and we'll see how SPY played out after that. Coming back to topics, overbought, many indecision and bear release signals at the top, not a time to buy, not yet enough signals to short. China CSI 300 index. Looking back, when the bullish indecisions came and then the bullish headwinds, we could start to buy from this point onward, and we would have profitable swing trades in the long direction when price went up to this point. We would like to buy at swing low point, not after price has gone up for 1, 2, 3, 4, 5, 6 days with green bullish momentum. That is too late to buy, and that is a way probably Q techniques differ from many other systems. We like to buy only at swing low, not at swing high. That technique helped us once again. Price came to the yellow direction line and came down from there. Let's observe the chart bit more carefully. It went up with bullish momentum. Then we had a bearish indecision, at which point the momentum changed to neutral, and right at that point price came down below the yellow direction line. The white direction line was already above price. Looking at that, you could apply the concept of pullback short setup and look for short candidates in weak fundamental stocks from this bearish indecision yellow candle that gave a kind of pullback short setup. I wouldn't short the index, but you could short individual weak fundamental stocks. And on Friday, price went down. I think it went down enough to give us at least one reward risk ratio move in the short direction. You could book partial profit and you could continue to hold partial position. It is looking bearish in daily and weekly both. In that case, there would not be any reason to exit full position, even if reward risk ratio had hit 1. China's CSI 300 is downtrending, and in fact on Friday it gave a flow trend following short setup. Let's look at the commentary. The commentary helps us to read the chart just like a very experienced Q trader would read it. And indeed, okay, why it is showing Wednesday? Let's go to Friday. Isn't it Friday? Okay, it seems that there was a holiday period in the Chinese market, so the last candle is of Wednesday, and as of Wednesday's candle it is giving a flow trend following short setup. So you could look for short setups on Wednesday, not Friday. It seems there was a market holiday in the China market. That is fine. China's CSI 300 is looking bearish. Let's move on to India's Nifty 50 index. If you are following my YouTube videos regularly, you know that based on the at a glance chart of Nifty 50, it created a double top at the previous, in fact triple top. At the previous top, bearish headwind led to a price drop, so I was cautious not to buy any more when price came to the triple top. And see the pattern playing out once again. Just like I explained in Japanese market, that I may wait for the trend line support to be broken to look for shorts. Here, that is what I explained in previous market recaps, and as of Friday's close, it has indeed broken below the trend line support. Earlier, it displayed bearish headwind, bear release, bearish indecision, momentum color changed to neutral, and finally momentum color changed to bearish. And Friday was the day you could look for short trades in the Indian market. Is it downtrending Nifty 50? No, it is still uptrending, and that is fine. Q techniques allow us to short in uptrending market using reversal setups. In the previous few market recaps, I also explained that Bank Nifty was looking weaker because Bank Nifty broke below daily trend line support before Nifty. Let's see how is Bank Nifty now. It broke the trend line support somewhere here, and now it is not able to recover. It is moving sideways. While it is moving sideways in daily, notice the weekly pattern again. Bearish headwind here that led to a significant price drop. Price came to the same level, retested it, and then had a cluster of bearish indecisions. While those indecisions were coming, the bullish backdrop changed to neutral backdrop, and this week it has changed to bearish backdrop with a bear release signal. This is weaker than Nifty, and if I am looking to trade banking stocks in the Indian market, I would like to take them in the short direction. I will not buy them because even if on Monday price went up, it will come very close to the trend line resistance. In fact, if it comes to the trend line resistance and tilts down from there, that will give an even more attractive shorting point. So you could look to short if price comes down from there, and you could also look to short if price goes up, and probably it will stop at the trend line resistance. At least I will anticipate that way and look for a short setup when it comes to the trend line resistance and watermark resistance in daily, at which point it will also come to the watermark resistance in weekly. Nifty is still uptrending. This is Bank Nifty. Nifty is still uptrending, but my preferred trading direction is bearish side. And lastly, let's look at UK's FTSE index. In the previous recap, I mentioned that it was inside a range and I wouldn't take directional trades unless it clears that range, and it has cleared that range to the downside, broken below the trend line support in daily. It also broke below the trend line support in weekly. However, in daily, the momentum color is already red for 5 days. So the recent swing high is quite far away for me to look for a breakdown short setup now. I may look for a short setup next week in individual stocks if price continues to go down, or another way could be to see if price can go up and then stops right at the trend line resistance. The yellow direction line resistance is also there. if it reverses from there, it will also give a lucrative shorting point there. So you could look for shorting points in either situation. I'll not look to buy now because even if price went up on Monday, it will come very close to multiple resistances. FTSE broke below range and my preferred trading direction is short. Let's look at the global custom index that is part of Q Global. And you see one interesting pattern. It was at multi-top, 1, 2, 3, 4. This was the 5-point top. And as I have explained many times, a false breakout, upside or downside, in this case upside breakout, is even more bearish than a normal sideways moving market rolling over from a top. This is a false upside breakout. The market went up, and this is the global index, custom index in Q Global. When it broke out of the range, it lured many late buyers into buying. And see, when it went up with bullish candles, but notice the size of the bullish candles. And last 2 days it dropped sharply with much bigger bearish candles, much bigger in length bearish candles. So all those people who bought using breakout techniques, they are in a loss now. Is it downtrending? No, it is not downtrending. It is still inside a range, but this was the point to look for shorting opportunities. Precisely Thursday was the day to look for shorting opportunities. On Friday, price already fell down. What was the technique that we could use on Thursday to look for bearish trades? That would be the box short setup technique. Of course, this is a custom index. We cannot trade it. We could look for individual markets and then individual stocks, look for weak fundamental stocks in weak industries to short at that point. Now is the time to look for the USA market, and for that let us switch from Q Global on Metastock to Q Elite on TradeStation. Let's start with SPY. Let's look at this chart first with historical memory trend lines. In the previous market recap, you may remember that I mentioned that I would be happier to short if this trend line support is broken, and that has been broken now. This was a 4 trading days week, so my last weekend recap was on this day, and right on that day I in fact started shorting stocks. That was the first week after many weeks that I shared a shorting idea, and there may be other short trades that you could find, I could find and trade. So in terms of looking at the weakness of the market, probably Q analysis was 1 week ahead of others. So we could look at the Q finder technical breadth as I shared in the previous market recap and visually observe the weakness, enough weakness to look for shorts. And I mentioned for SPY specifically, I would be happier to short if this trend line was broken, which has been broken now. Is it downtrending? No, it is still uptrending, and that's again the difference of Q systems with other systems. We can short even in an uptrending market. Individual stocks may not all be uptrending, but the market was uptrending last week, and SPY is uptrending even now. What about the at a glance chart? For at a glance, let me switch to the future symbol because in the last market recap, I observed something when analyzing the S&P 500 futures. I mentioned that though SPY was not going to create a false upside breakout anytime soon, ES, the future symbol, was going to create a false upside breakout if price started going down this week, and that happened. So we had a false upside breakout in the weekly futures symbol early in the week. That was the time, right at the top. In fact, right on this day. That was Tuesday. Monday was a trading holiday. Right on Tuesday, you could look to short using the false upside breakout in the future symbol. And price came down on Tuesday, Wednesday, Thursday, Friday, steadily going down. Yes, I can see Thursday on a closing basis price went up, but if you look at the pattern, the pattern is showing lower highs, lower lows. So we can just see it with our eyes that price is steadily going down. If you use the false upside breakout in weekly to look for shorts on Tuesday, your trade is more likely to be in a profit by Friday than not. It is still uptrending. Right now, I am not very willing to short SPY because the weekly is coming to trendline support. Also in daily, the swing high is some distance away, so my stop would be far away. Let's look at NQ. Again, let's look back. One of the reasons I was bearish from 1 week ago was this bearish headwind in NQ, the Nasdaq 100 future symbol 1 week ago. Once again, the daily bearish headwind caught the very top of the market. Since then, price has steadily come down, and as of Friday's close, this trend line support in daily is broken. So I am more willing to take shorts in Nasdaq 100 also. Other than the bearish headwind that led me to be cautious about the market 1 week ago, I also noticed that the jump thrust was already at extreme high and the up move was not sustainable. About YM, it's always useful to look back. When I analyzed YM 1 week ago, I didn't make any ambiguous statement. I, as usual, made a very clear statement that I would like to short YM because it came to the daily trendline resistance, weekly trendline resistance, displayed a bear release, displayed a bearish indecision. Price came down from trendline resistance with a bearish shape candle. So what technique could I apply? I could apply the technique of bounce short setup and short right on Friday 1 week ago. Price has steadily come down since then. Again, my unambiguous statement that I would like to short YM was very useful, also known as profitable in terms of trading jargon. Now am I going to short YM? No, now it is right in the middle of a sideways range. When it is in a sideways range, I like to short at the upper edge, buy at the lower edge. When it is in the middle of the range, that is a no trading area. So I am not going to trade YM now. Now, as you are observing, you can see how perfectly I could time my market direction switch once again. And when others are probably waking up to the weakness of the market, I'm saying I'm not going to short now. I will wait. I may hold on to the short trades I had taken at the very top 1 week ago, but I will wait now. I will not short in the middle of the range for YM. And lastly, for RTY, the small cap futures, Russell 2000 futures. In the last market recap, I showed that precisely for 5 days it was outperforming, shown by the relative performance sharply going up, and after that it was sharply underperforming. My last market recap was on that day. we can see it stopped at the daily trend line resistance, in fact created a false upside breakout at the trend line resistance. Notice the gradual changes in traffic light color also. Right at the bottom we could buy when the momentum color changed to bullish. Also there was a bullish flow, there was big move up 3. We would have bought at the swing low, once again booked profit at the swing high when the risk distance was covered, and then we could look to short when the green traffic candle color changed to neutral color and then changed to bearish red color. This was the precise day when you could start to look for shorts in individual small cap stocks, and if you did that, probably by Friday's close you had covered the risk distance, more likely than not. Not sure, all stocks don't move in sync with the futures or ETFs, but more likely than not you would end up with a profit if you took multiple trades. Am I going to short now? No. Once again, others may be waking up to the weakness in the market relative to 1 week ago. I should say weakness in the market relative to 1 week ago. But for me, RTY is now far away from swing high. I don't have a low risk entry point for shorting. So I will wait. If I shorted at this point, I will continue to hold those trades with proper trade management, my target and stop loss management. So market weekend for 1 week. However, I was bearish from 1 week ago, and this week I am saying I'm not going to short. Of course, I'm not going to buy market weekend from 1 week ago, but I'm not going to short anymore now. That the market weekend is clear from these external views of the futures. Let's look at the internal view also. That is internal health check using Q Global Market Breadth. And as you can see, all these signals are unambiguous. I also tweeted with the chart of USA Market Breadth total view during the week, showing further weakness coming in. What was earlier weakness? I shared in last market recap already. The bangos that come at the very top of the market. The fact that though market was making some significant size moves on certain days, the accumulation count was never green, always yellow, yellow, yellow. Never turned green recently. So that was showing that under the hood market was not so strong. And then came the Phoenix signal. Again, thanks to Mr. Ian Woodward, may him rest in peace. When the Phoenix signal comes near the swing high, that is a time to be cautious or even bearish in my view using Q reversal trade setups. This Phoenix is opposite to Eureka. If the Eureka comes near a swing low, that is the time to start looking to buy. And again, those may not be necessarily trend following trades. Right at the bottom, those would be more reversal trades using Q setups. You could take trend following trades here when we had another high accumulation count, but right from this low point where we had very high accumulation count with Eureka signal, you could start to buy. And we saw a Phoenix signal early this week. In fact, the first trading day of the week that came near swing high, and I think I tweeted about that right on that day, that was yet another reason to be cautious. And it was again very useful, aka profitable, because price went down from there. And what is this price? This candle chart is an aggregate view of the market. It is still in an uptrend, but clearly it weakened. And on Friday, we have another Phoenix signal. Even more reason to be cautious. Also, one more reason to be cautious 1 week ago itself was the 3-month new high low hit the upper extreme, and I showed in the previous market recap looking at the individual pockets of the market major indexes, that those were at the upper extreme for 3-month new high low. I think most of them or all of them were at or near the 3-month new high low overbought condition. That was reason to be cautious, and again those signals helped me and probably other Q traders to be cautious, stop buying and look for short trades 1 week ago. Now it has come down, it is still in an uptrend. Which stocks are doing better? Growth versus value is still going up, so growth is doing better. Small cap versus large cap, for a brief period small caps outperformed, since then they are again underperforming, so it is not time to buy small caps. The internal breadth chart is showing it is still in an uptrend, but it has weakened from 1 week ago. What about the mega caps? Mega caps were keeping the market higher, it is still keeping the market higher, and if we use the USA mega cap tech index, one reason I was cautious and shared that was the jump thrust high. It was not sustainable, and then it came the bearish headwind signal. However, I wouldn't short because the trend line support was still there, and as of Friday's close that trend line support is broken. Now if price continues to come down, what price? This USA mega cap tech custom index in Q global market breadth, if it continues to come down, two things may happen. One is we can look for shorting some of the mega caps that are at very high level using probably reversal setups, and also if the mega caps come down it will likely pull the market back because the mega caps were keeping the market higher on many days. The market was weak in terms of S&P 1500 or Russell 2000, but the mega caps were keeping Nasdaq 100, S&P 500 higher. If the mega caps pull back, the broad market may pull back more. That's something you may keep an eye on using the mega cap tech index. So we are continuing to see overbought condition, weakening of the market, but it is still in an uptrend from global market breadth viewpoint. What about sector industry stock advanced decline breadth? Now we see that other than the 1 month period, the long term view, where the sector, industry and stock advanced decline are still more green than red, but all the other periods, 10-day, 5-day, 2-day and 1-day, everything is bearish. And this graph is probably making others wake up to the fact that market is weakening, or maybe it is turning bearish in terms of some stocks at least. But I could anticipate that move 1 week ago, and I shared that publicly in the market recap. I doubt if many people suggested shorting 1 week ago. But now when you look back at the way the sector industry stock advanced decline rate played out, you know that my analysis was perfect. And I am not a magician, I just used the Q visual signals from multiple angles and I could anticipate this happening. Was I sure that it was going to weaken? No, but there were enough signals. I simply read those signals, and that is the secret of trading profitably. We are never sure, but on preponderance of evidence, we take a directional bias and take trades in that direction, aligning multiple forces. And last week, on looking at different aspects of Q techniques, I suggested shorting as well as buying one healthcare stock. Well, let's look at the bucket analysis. It is looking bearish when you look at sector industry stock advanced decline breadth. What about bucket analysis? Now 56% of S&P 1500 stocks are below mid Bollinger Band. So now the market has turned bearish from that angle. It's not oversold if we look at the percentage of stocks at the lowest bucket, but now using mid Bollinger Band as a reference point, we can say market has turned bearish. That is enough reason to look for shorts. Notice interestingly, SPY or ES and QQQ or NQ are still in an uptrend because they are heavily influenced by mega caps. When we are swing trading stocks, we don't just trade mega caps. So the internal view that I am looking at from multiple angles helps us decide whether it's time to short or not. And the bucket analysis as well as the sector, industry, stock, advanced decline breadth, they are telling us it is all right to start shorting. What about technical breadth? The balance between bearish and bullish setups, weekly interval is bearish, no doubt about that. This was not so bearish some time ago. So this is time to short, no doubt again about it, because technical breadth is very important for trading profitably. We don't make money if the stocks go against us. So when we find technical setups so much more in the bearish direction, it is very hard to make money trading in the opposite long direction. It is clearly bearish on the weekly interval. What about Friday interval? That is also very bearish. Once again, I like to highlight that last week's market recap, this was the view that led me to start shorting stocks, and that was the right decision. Now it is looking clearly bearish, both in the weekly as well as daily interval. If that is so, let's spend some time looking for some short trades. Let's see if we have squeeze move pattern on the bearish side, and we have 43 stocks showing squeeze move, that is stocks moving out of squeeze on the downside. Let's flag for them and see how many of them are giving trade setup as well. Well, all of them in fact gave one or more trade setups. I'm not going to open them using charts. I'm going to carry out a fundamental scorecard analysis of these 43 stocks and isolate the stocks that are weak in terms of fundamentals. Weak in what way? Either in terms of value or in terms of growth. Simplifying things. Then I may look at the charts, but I may not open the charts even at that point. Let me explain. So I have retrieved the data from Refinitiv, generated the scorecard, and yes, all of them are down. I expected that because they all have a possible Q short setup. Let's look at the scorecard. Let me click one star red button, this button, to find stocks that are either overvalued, valuation is magenta, or with negative significant earnings growth or condition. And now I am left with 18 stocks. So these are squeeze move bearish patterns with at least one Q short setup. They are weak in terms of fundamentals. I am left with 18 stocks starting with thousands of stocks. I ran the finder on all liquid stocks in the USA market above $5 value, $5 price. But I am not going to open these 18 charts. See how I am shortening my list candidates. I am going to look at their industry scorecard. I am going to focus only on stocks that are in the weakest industries. So let's select this and also select this one which is weak in terms of pace, and go back to the stock list. I am now left with 18 stocks. What are these stocks now? They are showing a squeeze move bearish pattern with at least one possible Q short setup. They are weak in terms of fundamentals and they are in weak industries. And my market view is telling me that I am okay to short. So if I find proper short setup in these stocks after looking at the chart, what I mean by proper is attractive reward risk ratio that I have to decide on the chart, then I would have found some 360 degrees short ideas. Now I could look at them using global on Metastock by clicking the chart, but let's use Q Elite also sometimes. Get the symbols to TradeStation and look at the symbols one by one. First one is TWKS. Beautiful breakout pattern, there is no doubt about that. It was inside a narrow range for a long time. The narrow range became narrower, and right on Friday it had a significant down move. It is giving not only a breakout setup, not only a trend line breakout setup, but also a flow trend following short setup when you apply the checklist conditions on weekly and daily. Has very high volume. I think there is good reason for this stock to come down with that much volume. So a short trade is favored. In fact, if you ran this analysis in the morning session on Friday using real-time systems, all the Q systems are real-time, you could short it right at the top using early range breakout technique, provided we had a low risk entry point. Let's check that out. I'm going to go to the fine-tune chart or pivot chart. In the morning session, I would use 5-minute interval, changing to 5-minute interval on TradeStation. Let's see, we had a low risk short entry using early range breakout or not. And we indeed had that. This was the early range high. This was the early range low. This was Thursday's close. So it opened here some distance below Thursday's close, could never recover, instead moved sideways for a while, and right at this point broke below early range low. That would be the short point. And you see, we had enough time till then. It happened at 10:30 that we had the early range breakout setup. 10:30 market opens at 9:30. We had 1 hour, so we had much more than required time to do the same 360 degrees analysis and find this stock giving a breakout short setup. If you go back to the weekly daily, you can see the breakout happened right in the morning session. Not sure exactly when the flow setup was signaled, but the breakout setup clearly signaled right at the open. So you could carry out this 360 degrees analysis in the morning session and short it at this point. Initial stop for the day would be just above early range high that was never even approached. By the close of the day, our reward was much more than the risk, and you could easily book at least partial profit in the trade. Another way to make the trade guaranteed risk free is to book the entire profit in the stock short position and use part of the profit to open an options trade in the bearish direction, probably using long put vertical. That way you are guaranteed to have a profitable trade in TWKS by Friday's close itself. At the close also it is giving a flow setup and a breakdown setup. 360 degree setup, isn't it? Weak fundamental stock, weak industry, weak technicals. Let's look at the next stock, ASRT. Very nice breakdown again. And once again, the breakdown happened right at the open. It also had a gap open move. Did it have gap open move? Let's check that out. Yes, in radar Q finder layout, we can see if a stock had a gap open move, and it indeed had. It means a SRT had a down gap down open. It was a bearish squeeze move and a flow bearish setup also that came on Friday. So using the gap open, you could look to short it on Friday, and let's look at the early range again. Early range high, early range low. Opening on Friday was here. Thursday's close was here. So it opened slightly below Thursday's close. Could not go up to the early range high at all. At this point, closed below early range low. That was the point to short the stock with initial stop just above early range high. That was never even approached. By the close of Friday, once again we had much more than risk taken in the trade. As reward, we could book at least partial profit. See how using the overall market's weakness, you could look for short trades and take them with very low risk. As of Friday's close also, it is giving a proper flow short setup, trend following short setup, if you applied the checklist conditions on the weekly and daily chart. See, these stocks are proving the point that I mentioned earlier, that SPY and QQQ are still in an uptrend. That doesn't matter. We have enough insights from the multiple Q analysis angles that is telling us it is okay to short now, and we found at least two short setups that are in fact giving trend following short setups as well as breakout setups now. I'll not go through all of these stocks. Let's look at another one. Let's look at this one, nicely down by a round number 3%, ACVA. And I like this stock for shorting. Why? It came to jump thrust high. Remember what I keep on mentioning, when a stock or future or any instrument comes to jump thrust high, it has gone up too much in too short time, and that is usually not sustainable. It's not guaranteed that it will come to a downtrend after that, but that up move is at least not sustainable. So I would start tracking it. Then you would notice the bearish headwind signal. Once again, very beautifully, the bearish headwind caught the very top of the move. It's uncanny. Uh, Sometimes I also wonder how it catches the very high of the market, the reversal signals. Sometimes you may read the bearish headwind as invisible resistance. There is no pivot resistance, there is no trendline resistance, but there is some invisible resistance there, at least invisible to our eyes. So we would be more cautious. Bearish headwind after jump thrust high. It was moving sideways, and Friday is the first day it broke below the trend line support, broke below the triangle pattern with a bearish flow, and the weekly is also looking bearish with a bear release signal, bearish backdrop. So I would say Friday was the first day we could short this stock, not before that. Before that we were inside a range, so though we had a bearish headwind, we didn't have bearish headwind short setup. We only had the signal, but on Friday we have a short setup. And that short setup is coming at price extreme high and reversing. Let's read just to emphasize the value of reading all the signals on a chart. Let's look at it on Q Global and read the commentary. That was ACVA. Okay, ACVA. View the expert commentary. It is giving a breakout short setup as of Friday's close, and look at the patterns. It is at price extreme high pattern and also a bearish squeeze move pattern. Yes, we knew about the bearish squeeze move because we started our bottom up analysis. We started with Q finder, that is bottom up analysis, and we first looked for bearish squeeze moves, then we looked for stocks with the latest one short setup, then we looked at weak fundamental stocks either in terms of valuation or growth, then we looked at weak industry stocks as well, and this is one of those stocks, and now we see it has a price extreme high pattern also. So you could find trend following short trades like we saw earlier, two of them. You could also find trend reversal short trades like in this case. This is a breakdown short setup that is reversing from uptrend. So we could find all kinds of short setups in the current market. I will not like to look for long setups now. Preponderance of evidence shows that it will be easier to take swing trades profitably in the bearish direction now, and once again that view I started from 1 week ago thanks to the unambiguous Q systems. I'll not like to look at more stocks now. Thanks a lot for joining. I look forward to seeing you in my next week's session. It will be during the weekend. You may know it from YouTube if you are subscribing to the channel, and I also tweet the date and time on Twitter. I look forward to seeing you in that session also. I'm quite confident you will find valuable insights from all these sessions. Thanks again for joining, and as this live examples show, once again I may say that if you are following a disciplined system, you're following disciplined techniques with a robust system, there is no reason not to trade profitably. You may please do that. Have a great weekend and see you again. Thank you.